Good afternoon, guys. It's Saturday, May 7th. My name is Dave Coker, and this is Talking About Finance. As we usually do, let's take a look at the markets. And well, keeping an eye on the correction that's underway, we can see last week wasn't really as bad as you might think. What happened? Well, S&P 500 finished down about 21 basis points on the week. Not that bad. It's down about 13.5% year to date. Not so good. The VIX traded up to 30.19, still a couple of standard deviations above the mean. And it's an understatement to say this is one wild market. My gosh, it's an awful lot of fun. I'm enjoying every minute of it, and I hope you are too. The 10-year note closed this week at 3.13%. It's above 3% now for 10-year money. It's up 1.6 year to date. Oil closed the week at 110.51. Remember, Goldman's called 130 oil as a trigger for a recession. We'll have to see how this plays out. Oil's up about 5.6% week on week, about 46.9% year to date. Now, inflation still seems to be running hot, but some suspect it's peaked and should trend down over the next couple months. I don't really have a view about that. We'll have to see how it all plays out. At least the Fed last week took a 75 basis point hike off the table. So now we're looking at a series of 50 basis points hikes, and we can deal with that. They're outsized. Normally we go 25 basis points. 50, a couple of 50s in a row, no big deal. As long as we get the uncertainty off, that's a net plus. Last week I was pretty active. I bought stocks Monday, I bought stocks Friday, I bought Bitcoin Friday as I do every week, and I bought Ripple Monday, Tuesday, and Friday as well. So I'm deploying capital. And if you're an investor, you might want to start to size up an entry point and go for it. My situation's a little bit different. Remember, I only buy dividend-paying stocks, so I'm largely share price indifferent. As long as I don't cut that divvy, I don't care. I'm fine with it overall. Let's start to see what else is going on here, guys. We started to take a look at global stock markets, and I don't know who put this in the chat. Really fascinating, though, when you look at this. We can see we're off about 12% since the peak, roughly 9 months ago. So we've had weak markets for a while now. Now we're starting to see it accelerate a little bit. And here, this is a really good one from Bank of America. Really cool. You can see that U.S. stocks are in real terms, are going to have one of the worst starts since 1974. Yeah, you might want to think about what you're going to be doing. You're going to be putting money in. It's really good to start to think about this when the market is burning off. What's your entry point? When you're going to start to deploy capital? And we know, when we look at these crashes, we know that they happen from time to time. Well, a lot of noise now about the tech meltdown. We talked about it last week. To put it in perspective, we can take a look at the tech market cap as a share of the S&P 500, running about 36.5 now. It was up north of 40 before. And take a look at the dot-com bubble. It was up north of 45 back then. I've circled in the red line, I've circled two other drops of equal magnitude, roughly. And you can see this is nothing new. So we're doing it again, and it's not really clear how bad it's going to get. Could get worse, but you just got to take a long-term perspective. We can learn something when we take a look at the NASDAQ, when we take a look at the number of stocks that are above the 200-day moving average. And look at this, guys, on the right-hand side. We can see that we've got a really low number of stocks that are above the 200-day moving average. Are you going to be moving capital in? What are you going to do? The poor consumer, though. You really have to wonder what's going on. Consumer debt is soaring. This is off the research I sell, and I posted this note this morning. What we're doing is we're looking at consumer codes, credit cards, and other revolving debt, things like that in the States. You can see here that the previous high was in March 2020. Current is actually much higher. And we came up about almost 18%, 17.6% from the low, which was April 2021. Over a one-year period to April 2022, we're running at 872 billion. If everybody's so liquid and if everybody's working, why are people engaging in debt? I don't like debt to begin with, but why are they doing it? Well, it might have something to do with this, with inflation. Now, we've spoken about this before. You know I don't believe the official inflation data for one simple reason. CPI, the Consumer Price Index, is a weighted sum of some 80,000 individual components. Oh yes, 80,000. So CPI reflects your particular situation if and only if you use all 80,000 components in the same weights as the CPI calculation. So I don't believe it. I calculate our inflation here in the UK and our rate of inflation, our personal rate is closer to 14%. I've mentioned that before. Now, BLS is even saying that the official rate for some cities is north of 10. But is it really? I've got friends out there in Arizona, and they disagree with this fervently. They do not believe it's 10%. They're saying it's closer to 20, the year-on-year increase that they're seeing. Really, really interesting. So, yeah, you got to be really, really careful when you start to look at numbers like that. But guys, in general, just think about Bitcoin. We talked about this last week, where Fidelity is going to include Bitcoin in 401k plans, and they manage about the plans for 23,000 or 28,000, I should say, companies. Now, this is in Barron's, just came out today. Really interesting article to read, because when you take a look at the way they're structuring it, what they're charging the investors, as well as the companies, the author on Barron's seems to think it's going to be worth anywhere from 200 million to 1.2 billion per year to Fidelity's top line. That's nothing to be sneezed at. And again, I'm pro this, because what this is going to do is not only is it going to increase acceptance, but other entities are certainly paying attention to this, and they're going. If the numbers turn out really good for Fidelity, they're going to follow. And then we can start to put Bitcoin in retirement plans. Really cool stuff. And as I said on my blog, FinTech Flash News, when we broke this story, this was epic. This is incredibly epic. Can't understate how epic this is. We're going to, because Fidelity, I'm with Fidelity, and they're very, very conservative. And for them to do this is just, it's epic. to use that word again. Oh, here's an interesting one. We were talking about this. And again, I did a research note on it. We know that some various capital markets assets exhibit seasonality. In other words, there's a pattern, and you can actually take a look at returns in certain months and figure out whether they're above average or below average and things like that. So now what we're doing is we're going back to 2014 up to 2022, and we're looking at the seasonality of Bitcoin month by month. And the way you read this chart is that you can see January has a 38 at the top and a negative 5.5 at the bottom. Now, 38 months, Bitcoin closed higher than it opened in January. You can see also here when you take a look that it was a 5.5% drop, so not so good. February, by contrast, 12.5% increase, some 88 months that Bitcoin closed higher than it opened. And we're currently entering May. May historically is a good month. Hope it's going to be a good month for Bitcoin this time. So it's always curious to look at seasonality. And remember, this is something that many academics don't acknowledge. You can take a look at seasonality for gold, for instance. I always like to show people that there is seasonality in gold. There's seasonality in Bitcoin, obviously, here. And there's seasonality even in stocks. We just got to look for the proper indexes or proper assets and measure it that way. Okay, guys, that's it for this week. You're going to have a wonderful week. Start to deploy capital, or if you're not really confident in deploying capital right now, start to think about when you'll deploy capital. Go forth and make money. Take care, guys.